DSV has a particular presence along the US-Mexico border. Is that an area of particular concern for you?
Yeah, of course, there's been a lot of jobs created there. There's a significant volume crossing that border. It's still a wage gap that is significant, so a lot of production will still take place in Mexico, but of course it's going to reduce the cross-border trade there. And then, I mean, we move the cargo anyway, so we would then focus on more the domestic side in the US to move the freight. But of course we have to be able to shift around. We have a flexible business model. We are asset light, so it's part of our DNA to be able to handle these things. But this one seems like a big change, so we really have to up our game to make sure that we keep the supply chains of our customers flowing.
Absolutely, and you did flag tariffs as one of the key risks for 2025 in your outlook. What have been some of the preparations that customers have been making ahead of this?
I think if you go back all the way to the first Trump administration, there was already, business continuity plans being put in place at that time, and there was always then this China plus one strategy and nearshoring and all that, and then all the way up through COVID, this has been taking place. So we've had some time to prepare ourselves, and we see that a significant export market out of Asia is, for example, now Vietnam to the US, which had a very limited presence back then, but now it's very important. And we've been sort of moving the volume from these new origins and into the US and ramping up then capacity in those areas so that we can meet the requirements of the customer. And I think at the end of the day, we're going to continue that journey, and it seems as if we're going to have a busy time the next month.
You also said in your results in February that, these tariffs could dent demand for a company like your own and potentially impact profits. You already reported a slight decline of 1.2% in profits last year. So what are some of the modelling that you've done around that? Do you have a forecast for what the ramifications could be, or any of the practices that you've put in place?
Yeah, we've seen that the volumes in and out of the US is sort of 10-20% of what we produce, and then if they decline, let's say 10%, then it's, let's say, 1 to 2% for DSV. But I think it's something you have to take with a grain of salt, because let's say the Mexican market might also be impacted, or the Canadian market, or other markets as well. So it might be that it will pull the volumes down also on other trades. So it's not only the direct sort of interaction with the US, but it's also all the other trades that might be a little bit impacted. So we will have to see. It could also perhaps turn a little bit round, that then there would be more focus on more trade in the other areas. And time will tell how the consumer reacts, because the consumer will decide at the end of the day, so we don't know.